Whitney Tilson, Managing Director of Kase Capital, thank you so much for taking the time. We appreciate it.
My pleasure.
Now, you were part of a 60 Minutes investigation on Lumber Liquidators, which found that their suppliers in China using product tainted with levels of formaldehyde beyond what's acceptable by California standards. You first shorted the stock in 2013. What's your position now?
Well, I increased the stock as I learned about what they were doing with formaldehyde. That was actually not originally part of my investment thesis. So the last trade I did in it was back in October, and at that point I brought the story to 60 Minutes, and they were much better positioned. You know, they're the top investigative journalists in the world, in my opinion, and I'm just a small one-person operation hedge fund. But I sort of figured out what Lumber Liquidators was doing, took it to 60 Minutes, established about a 3% short position, and then waited for them to do the story. And last night I was more than pleasantly surprised about what they came up with. It was incredible that they got hidden cameras into the factories in China and got the plant manager confessing that, oh yeah, they say it's CARB 2 compliant, but it's really not. So it was an incredible piece of journalism, and continue to hold the position and have no intention of covering, because I think at this point, given what I saw last night and my own research and analysis, that this company has contingent liabilities that would swamp this company someday, and so I intend to continue holding the short position.
So no involvement beyond when you initially took the story to 60 Minutes a few months ago?
Well, I was very involved, and in fact, a year prior to that, in November of 2013, I presented at a very large conference, the Robinhood Investors Conference, that I was short the stock. My thesis at that point, actually, though, was focused on another type of wood that Lumber Liquidators sells. Laminated is the low-end commodity product. At the high end is hardwoods. And the story at that point that I had was, and correctly I believe, was that the Russian mafia was harvesting, illegally clear-cutting valuable endangered hardwoods in Siberia, smuggling the wood into China to illicit Chinese mills that were then processing the wood and selling it to Lumber Liquidators. And Lumber Liquidators was happy to look the other way because they could save 10 to 20% on their sourcing costs. So it's a similar story now with the laminate, but that story I only discovered that story about a year ago.
Now, Lumber Liquidators did issue a response to the allegations Monday afternoon saying, "Our laminate floors are completely safe to use as intended. In our attempt to be fair and transparent, we provided significant testing results to 60 Minutes, including the results of the random testing performed on products from each of our laminate suppliers. We also went to great lengths to document issues between the validated test method and that used by 60 Minutes." Why two different methods of testing the same wood with two different conclusions?
Yes, well, actually, it's a little bit even more complex than that, in that there is some testing that goes on in China. And my understanding is that the testing there is a sham. The testing there should have picked up the formaldehyde problem, but in China, it's sort of the Wild West, right? The real testing that should have picked up the problem is here in the United States. And without going into too much complexity, the standard for testing laminated wood is, and this is the California Air Resources Board standard, and doing it this way is where they measure the danger level of formaldehyde, is you take the laminated wood and you use a belt sander and you sand off the top layer to expose the core, which is where the formaldehyde tends to be. And it's based on that type of testing that the California Air Resources Board sets the safe or not safe level. That all the Lumber Liquidator samples that I tested, that 60 Minutes tested, that other people have tested, far exceed those standards. What Lumber Liquidators is doing is they're saying, well, people who buy our product don't sand off the outer layer, they just install it as is. So that's how we're going to test it. And of course, in that case, the formaldehyde is sort of sealed into the wood, and so they're claiming, well, it shows that it's safe. But what they're doing is they're mixing apples and oranges. They're testing the wood using their own testing methodology, which nobody else uses, and CARB, the California Air Resources Board, doesn't use, but then they're comparing the results to the CARB standards, which assume that you've sanded off the outer layer, right? So there is an industry standard way to do this. The CARB has, and it's the CARB way to do it, and it's the way everybody does it. But Lumber Liquidators has just picked their own way to do it to make themselves look good and try and hide the fact that they're poisoning their own customers.
Now, shares of Lumber Liquidators down about 50% over the past year, down substantially
over
on
the past
Monday.
week almost.
where does the stock go next? Will it continue to fall?
You know, I don't really have an opinion short term. I'm not a trader and I'm not trading the stock. I haven't traded a single share of this stock in 5 months almost, and I don't intend to going forward. I think long term, this, as I said earlier, I think this company collapses under a wave of customers demanding, one, that if I've got Lumber Liquidators flooring, I don't know if it's laminated or some other kind of wood, I want it tested, first of all, and I'm going to send that $1,500 bill. That's how much it costs to test one piece of wood. Secondly, if there's any hint of formaldehyde, I'm going to hire somebody to come in and rip it out immediately. My children are crawling on this floor, right? And guess who I'm going to send the bill to, right? And then let's say I've got a cough and I go to the hospital. I don't know what caused it, but guess who I'm going to send that bill to, right? Much less, you know, if anyone in a household that gets cancer, let's say, formaldehyde is a known carcinogen. So you can imagine very easily in our litigious society, you know, this is tainted formaldehyde-soaked wood. Lumber Liquidators is sold into tens, if not hundreds of thousands of American homes. And I think all those customers are, one, very worried right now, and two, are going to start demanding that Lumber Liquidators make it right.
A lot of the analysts on Wall Street Monday saying that this is a short-term event for the company, that it'll get past it. One analyst from Morgan Stanley saying the quality allegations are 2 to 3 years old, and the company has seemingly taken many actions to resolve them. But after watching the 60 Minutes episode, we're concerned that quality issues may still exist. The piece suggests that the legacy issues may not have been fully resolved. Where were the analysts? Were they asleep?
Where they usually are, which is just parroting whatever the company tells them. I'm trying to think in my 17-year professional investment career if I've ever seen a Wall Street analyst actually really go out and really look under the hood of the car and really pay, for example, like I did, to just go pay to test some of the wood and hire a lab to test it, right? To validate whether, I mean, these formaldehyde charges have been out there for a couple years. It wouldn't have been hard. It wasn't that hard for me. I'm just a solo operator to just hire a lab to go test some wood. So the analysts were doing what they always do. Their clientele, keep in mind, is not the investing public. Their clientele is the companies whose stocks they're generally promoting.
So you spent some time doing a lot of research on this company. If Lumber Liquidators was to say today, we're going to pull all of our product that was manufactured in China, we're going to,
at least the laminated wood, by the way.
At least the laminated wood. Would the company be able to survive?
Probably not, because they've been selling hundreds of millions of square feet of toxic wood into tens or hundreds of thousands of American homes for a number of years, at least 2 years, I would guess, maybe longer. So what sinks them is not sales of laminated wood, toxic laminated wood going forward. I'm assuming that today they're no longer selling this toxic wood. That's what the CEO sort of said on 60 Minutes last night. It's the stuff that's already out there, and the cost to test it and or rip it all out and or pay the medical bills of anyone in those homes who becomes ill with the types of illnesses associated with formaldehyde. This is really a sort of an asbestos kind of situation, and basically all those companies went bankrupt. And by the way, I will say, in some ways this is worse for Lumber Liquidators than asbestos, because the asbestos industry, back in the 1950s and 60s, nobody knew asbestos caused mesothelioma, and everybody was doing it, right? As 60 Minutes pointed out last night, they have tested Home Depot's laminated product from China, Lowe's laminated wood from China, and it was in compliance. In other words, it's not that hard to buy non-tainted wood from China. You just have to pay about 10% more for it. And Home Depot and Lowe's are serious about their compliance and understand that you can't go to China and hit the low bid or you're going to get a toxic product in almost any industry, right? So Lumber Liquidators, though, was just looking for the lowest price no matter what.
So 10% cheaper, but also that was kind of the margin that they were getting, right? 10 to 20% on their laminate product that was coming out of China?
Well, they don't break out even what percentage of their total sales are laminated, much less what the margin is. An analyst report I read estimated somewhere between 17 and 25% of their $1 billion a year of annual sales is laminated. product. And so you can imagine if you can save 10% on your sourcing costs of that big a chunk of your business, somewhere between 1/6 and 1/4 of your business, that would have a huge impact on your bottom line. And in fact, Lumber Liquidators' margins over the past 2 to 3 years have doubled. And that doesn't make any sense. That was one of the first things that clued me into this as a good short, in that very suddenly the margins of a company that had been around for 20 years and its operating margin had always been between, somewhere between 5.5% and 6.5% for most of that time period. And then a new CEO came in and they bought a small little sourcing company in Shanghai called Sequoia. And all of a sudden, boom, margins doubled to more than 13%, from 5.5% to 6.5% for 20 years, and then like that, in very short order. It just didn't make any sense in a commodity industry competing against Home Depot and Lowe's that your profitability could suddenly double, right? More than double. So that's what got me digging into what could possibly explain this, and I stumbled into the hardwood story, but that's only 3 to 5% of their sales. And it was only, but I figured, well, if they're cheating there, they might be cheating in the rest of their supply chain. But I couldn't prove it. And so it was only many months later that someone reached out to me who saw my presentation or heard about my presentation at the Robin Hood conference, reached out to me, said, Whitney, the hardwood story is correct, but that's only a little piece of the story. The big story here is that a much bigger portion of their business, laminated wood, there's a big formaldehyde problem here. And he was someone who I can't really say much more about, but someone who knew the laminate wood industry in China, knew Lumber Liquidator sourcing practices, and laid the whole thing out for me.
Our Jim Cramer says that, even if the reports end up being proven wrong or over-exaggerated, that the bigger story here is that sales could take a hit for a really long time. And so is it possible for Lumber Liquidators at the end of the day to survive?
Personally, I wouldn't buy anything, knowing what I know now, that whether they intended to or not, there's no question in my mind that they have been selling toxic products to their customers for at least a couple of years. I would never trust, I wouldn't buy any kind of product, even though I think the formaldehyde problem is probably limited just to, maybe 1/6 to 1/4 of their sales down at the low end in the laminated products. So, I think this could really affect their sales. I'm quite certain, like I've talked to some business people, friends of mine, who build, multifamily housing, for example, and they're calling all their contractors and saying, "Have we installed any Lumber Liquidators wood in our housing? Because we're liable if the people renting our apartments." So anyone, at this point, none of those people are ever going to touch the product again. Because imagine a couple years from now, some new scandal erupts, and people are like, "Wait, you were buying Lumber Liquidators product after the 60 Minutes story aired?" So I think Jim Cramer is exactly right. That's hard to predict. I think on the expense side, the contingent liabilities, the thousands, tens, hundreds of thousands of customers demanding their money back, demanding that Lumber Liquidators rip out this flooring, demanding that they at the very least test the flooring so they can sleep easy at night, that they're not being poisoned by the flooring. I think that by itself wipes them out. And this is a company, by the way, that has $20 million of cash, no debt. So the balance sheet is fine, but they don't have a huge cash balance. And it's not a super profitable company. Last year, net income was $17 million. So there's not a huge cash cushion here should sales take a dive and the company turns unprofitable, and or they have to start paying huge legal fees and testing fees and remediation costs and all. You could very quickly see the equity here being wiped out.
Is shorting a big part of your business?
I'm primarily a long investor and always have been, and it's very difficult for a one-person operation like me. I don't even have an analyst to run much of a short book. So I'm short a half dozen stocks, and I'm long 15 to 20 stocks. So most of my exposure is on the long side, and most of the time I spend trying to find good companies with undervalued stocks and hold them for many years. I've owned Berkshire Hathaway for more than 20 years, for example. But I do like having a little bit of insurance, something if the market goes down where I'm making some money. And And I think it's good just sort of intellectually to sometimes play the other side and look for companies that are doing the opposite of what I look for on the long side, that are doing terrible things to their customers with overvalued stocks. So it's not a big part of what I do, but it's still important. I'm not willing to give it up, but it is an awful tough business. And anyone who asks me, I tell them, they're like, so should I get into the shorting business in addition to just doing long investing? And I say, don't do it. Unless you're running $1 billion fund and you can hire a bunch of analysts, to follow all these positions. It's probably not worth the bother. But I've been doing it for a dozen years, and I'm not quite willing to give it up, but it's tough business.
We've seen a lot of activist investors trying to force change at companies over the past couple of years. A lot of those activist investors hold short positions.
Sure.
What part do they play in the markets?
Yeah, I think a
in
really
keeping
important
companies
part,
honest?
because I think the rise of activism in general is one of the biggest stories in the markets in the United States, certainly, and to some extent globally as well. There's just been a tremendous rise of activism in general. Now, some people are really activist specialists, Pershing Square, for example, or Carl Icahn. But even the big institutional money, the Fidelities of the world or whatever, are starting to give activists a good hearing and lend their trillions of dollars of capital behind investors. And I think that's generally, while there's some abuses here and there, I think it's generally very healthy to have, the shareholders of a company are the owners of a company, and they should act like owners, not like passive sheep just doing what they're told by management and boards. And if they don't like it, they just sell and move on. So I think concurrent with that, there's been a rise of activism on the short side. People like me, and not that there are far fewer activists on the short side because it's a much more perilous business. I can tell you, everything I say right now and everything I said to 60 Minutes, et cetera, I'm fully expecting Lumber Liquidators will be parsing very carefully to sue me. And I have no doubt that to the extent they have any connections at the SEC or the New York State Attorney General's office or whatever, they will try and have regulators come investigate me because they'll be crying market manipulation, et cetera. That's one of the reasons I'm very careful in what I say and what I write, and very careful in my trading. I have not traded this stock in 5 months because once I gave the story to 60 Minutes, I didn't want anyone to accuse me of trading around that news, right? But it was short sellers who blew the whistle on the housing crisis, and myself included. It was a short seller, Jim Chanos, who blew the whistle on Enron. It was short sellers who investigated and revealed all of the China frauds, the reverse merger frauds, hundreds of companies that were defrauding American investors. So I actually look for situations on the short side where, in doing my job, which is finding good investments on the long or short side, in some cases speaking out publicly about it, is also doing a public service. And I think in this case, the work that I've done and other short sellers have done, that 60 Minutes profiled, people I didn't even know, Lumber Liquidators is claiming it was all a big conspiracy. I've never had any contact with those people independently, helping bring to the public's attention and regulators' attention that a company, knowingly or unknowingly, is selling dangerous and toxic products to American families, that's a public service. And so I think it's important. Short sellers sort of get a bad rap, like we're rooting for failure and we're trying to drive companies into bankruptcy. Well, honestly, if a company is poisoning its own customers and knew that or should have known that, then they deserve to go bankrupt, and our country and our capitalist system is the better for it if that happens.
Whitney, thanks so much for your time. We appreciate it.
My pleasure.